Ooh, good evening, guys. Good evening. Just getting started, just getting warmed up, just getting everything in order. Order. All right. Hey, Gail. Gail, how are you doing tonight? Just getting ready there, Miss Gail. All right, who do we have here tonight? Who do we have here tonight? Just getting started. L. Reed, how you doing? Nick, what's happening? Hugh Johnson, what? Rave Rahal. Okay. I'm just a king. Okay. Bill Calloway, how you doing? Gretchen Harris, how's it going? Specs, what's happening? Aaron Hepp, what's going on? User 60616718, whatever. Joel Venegas, what's happening? Mr. Lou, Scott Hill, what's going on? Jonathan Pakaris, dude, early tonight, nice to see you. Business start to finish. Hey, how you doing? New here, I see that. Chris Landifor, back again, I see that. Famous TikTok, okay. Ariel, good evening. Darlene, wonderful. Momoa, okay. Mikey, what's happening? Christopher, hey, what's happening? What do you think of Bank of America? Ooh, let's take a look at Bank of America first on the list. I'm going to think of something. Hold that thought. I'll be right back. Alrighty. Sorry about that. Had to get my back brace on. Back's starting to hurt. That's not good. It's getting old shits for birds. All right. Hey, James. Hope you're having a good day. So far, Mike, I am. First one on the list we're going to look at today. Ooh, not going to look at that one. Oh, boy. What do we have here? Okay. This one? Nope. This one. Nope. What the hell? All right, let's do this one. Hold on a second while I sign in. All right, who else do we have? Larry Brown, what's going on? Uh-oh. Some of these went right by me. Hold on. Okay, here we go, right here. And Pekaris is there. Okay, Momoa, Mike. I'm going to take a look at Bank of America as soon as I get this thing up and running. See if that does it. Hope you're having a good day. So far, Michael, I am. Dice08. Dice08. I don't know. Tashella, hey man, how do you like O and F as dividends? Now, Ford I like, O Realty I don't. We're going to talk about that in just a few minutes. Now, Tashetter, I don't know if that's how you pronounce that one, but O Realty, O, is a monthly optionable stock, which means they only have an option once per month. Now, you're new here, so you don't know, so I'm going to cut you a little bit of slack, but I don't do stocks that have monthly options. The only reason being is they just don't work for me. They might work for you. More power to you. Good for you. Give me a second. What's over here on YouTube? Lady Starcrust. Well, good evening. Business start to finish. What's the channel about? Oh, business start to finish. We are here investing in dividend stocks for a safe, simple, consistent 1% per week. That's over 50% per year using only pre-qualified dividend stocks. And those are companies that are consistently profitable for more than 2 decades. Hope that works for you. Anyone know? Okay. Count me in. All right. Buy and hold stocks. How are you doing? John Warner, how are you? Mux Capital, back again. Good evening. Good to see you again. Nice to see you too. Larry Brown, hey. Okay. This is just got here. Just signed in. Here we go. This is the one we want to see. Right there. And let's get out of that. Let's go to here and let's go to here. The first one we want to see tonight is going to be Bank of America. Woohoo! All right, I'm going to keep saying hi to everybody who's here. Buy and hold stocks, MDLZ. We'll take a look at that one. All righty, always good to hear. Cool, Silver Dude, what's happening? It's cheddar like cheese. Oh, cheddar, got it. Sorry about that. Cheddar, I'm 24, so I have a ton of time to work with. And I like O, so I can track sort of a younger annuity. Oh boy. Okay, I'm definitely going to show you O, and you may or may not change your mind. Okay? Do I like T. Rowe Price? We'll take a look at that one also. A 30-year real estate. I'm out of time, but I have a bit of work to work. Okay, all right, well, that works. 30-year real estate broker. We'll take a look at that one. Andrea wants to take a look at Nike. Cool beans. All right. Mux Capital. Question. When your stock gets called away, does it happen instantly when the stock price is hit or at a close of business? Oh, it can happen anytime. Now, the interesting thing about U.S. stock options is they can be exercised anytime the person feels like doing so. Okay? Now, European stock options, you can only exercise them on the date of expiration. That's it. So here in the U.S., anytime. Anytime at all. Okay? Hope that answered that question. Okay, Cheddar, you'd like to hear more about my feelings about O Realty. We're going to take a look at O Realty as soon as we finish up with Bank of America. So sit tight and maybe you'll see something that you haven't seen before. Maybe. You just don't know. All right. So let's get started. First and foremost, my name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. My goal is a simple, safe, predictable, consistent 1% per week. Now, 1% a week does come to over 50% per year. Now, that may be enticing to some of you, but it's not actually free. You actually have to do some work. Okay, 10 to 15 minutes a day. Now, I know that sounds like a lot of time for some of you people, but think of it this way. 10 to 15 minutes a day is less than an hour a week. So if you can imagine whatever you have in your account, divide it in half. Let's say you get $100,000. Well, half of that is $50,000. Well, $50,000 a year for 1 hour a week. Well, that's about $1,000 an hour. Now, if you have a smaller account, it may be a little burdensome at first, but think about it. 50% per year. You can double your money every 14 to 16 months. Okay, just a thought. Antoine, good evening. All right, so here we go. First and foremost, I have a very 1, 2, 3 equals 4 type scenario. I have the same strategy I've been teaching for the last 15 years. So if you have any questions, please do me a favor. Only ask the question once. I will answer each and every individual question before the night's over. Okay? That being said, let's start. First and foremost, the 1-year chart. There's the high, here's the low, here's where it was, here's where it is. Look at the motion. Down, up, down, up, down, up, down. Now it's going back up again, 42.70. So we're looking at the 43s, because that's the closest one. Here we go. The 43s right here. 44 to 46. Now that is over 1%. Okay, how do I figure that out? Well, 44 cents a share is over 1%. Well, at $42.88, that's right around 43. You move the decimal point over 2 spaces. 43 cents is 1% of 43 It's that simple. You just move the decimal point over. Yeah. All right. Anyway, so let's take a deeper look into the numbers to see if this is right. I think I'm missing something over here, so let me squeeze this down a little bit. All right, can we see it? Yeah, all right, well, that's it right there. Okay, let's do this. All right, a year ago, Bank of America is at 36.17. The bottom of the year was the middle of April, 34.11. Then she shoots up. Here's your high right there. Well, the high of the year, the end of November. The end of November is the high of the year, 48.08. She drops, retraces, drops again. Now, this looks good. Okay, up, down, up, down. Now she's going back up again. Well, is she going to come back up here? We don't know. Now, I'm just looking for 1%. I could take this for a ride a little bit further, but we'll see how it works out. But I'm looking for 1% every single week. I get in, I get out, all there is to it. So, the last 30 days. Now, the reason I want to look at the last 30 days, it gives me a good idea of where the stock is going to be by next Friday. Okay, so let's take a gander. 30-day high right here, 30-day bottom. Look at this, 1, 2, 3, 4. 4 times it would not go below 39. So it's probably a good bet to say 39 is your support. All right, but now it's going 1, 2, 3, 4, 5. 5 days to the upside. Look at all this real estate up here. That's a lot of space because your 30-day high is right there at 47. 39 to 47, so that's a lot of space up there that it can move. All right, so let's actually take a look at a simple, safe trade. Now, the simplest, safest trade that I know of is called a covered call. That's where you buy the stock and you sell it to somebody else for basically the exact same price, but using a stock option contract. So let's take a look and see what it says. Question: if the strike price hit, we just take that. We already did that one. Sorry, we already did that question. All right, so we're going to look at the 43s. So let's get rid of all this. We're going to get rid of this. Okay, and then we're going to change this right here to a covered stock because I'm going to buy the stock and then I'm going to sell somebody the rights. Not the stock itself, but just the right to buy it, to be the first in line to buy this by next Friday. Now, see the dates here? Now, these are weekly options. Now, let me explain. 21 March, that's tomorrow. 28 March, that's next Friday. 4 April, that's 2 Fridays away. 11 April, 3 Fridays away. 17 April, 4 Fridays away. 25 April, 5 Fridays away. Friday. Every single Friday. I can do this every single week. I cannot do this with monthly options. It does not work. Not for me anyway. Anyway, the 43 right here. So we're going to buy the 43 right there. Here's the 43. Now, we're only going to do one contract so you get an idea of what one is going to equal to. Now, I'm going to change this from a limit order to a market order. And here's my reasoning. Now, changing it from limit order to a market order means that this is going to fill first thing tomorrow morning. As soon as the market opens at 9:30, I'm going to buy the stock. I'm going to sell the option all before 9:31. Okay? Now, also the reason why I do it, remember I said simple, safe, predictable. I know exactly what I'm going to make before I even do the trade. Consistent. Every single week, I can do it over and over and over again. All right, so buy one covered call, Bank of America 100. That is the weeklies. 28 March 25, that means it expires next Friday. So whoever buys this option from me, I have no idea who it is, but whoever that is, they have between when they pay for it until the day it expires, which is 28 March 25. 4 p.m. next Friday. So shit or get off the pot. Sorry to use that language, but it is what it is. Do something, don't do something. The option will expire at 4:01. Well, actually expires on Saturday, but you really can't do anything on a Saturday. So technically at 4:01, you're SOL. All right? The $43 call option against this Bank of America stock at the market to open to open. See, I'm doing 2 orders at once. I'm only paying 1 commission, but I'm doing 2 orders at once. Now, I already know what my profit's going to be. So what does that mean? Well, let's take out the calculator to find out what kind of rate of return am I looking to get. Well, if the profit is going to be $96 per contract, I'm going to put 96 in here. Then I'm going to divide it by my investment. Well, my investment is $4,204 for each contract. $4,204.66. That gives me a grand total of 2.2%. I'm going to write that one down. Anytime I come up with one that has more than 2%, I write it down. All right. So here's the thing. 2.2% every single week comes to over 100% per year. Now, I don't know about you, but when's the last time you invested in anything and doubled your money every single year? I don't know. All right, so that's Bank of America. Next on the list, I told Cheddar that we were going to take a look at O Realty and why I don't like it. Okay, so let's get rid of all of this stuff. Go back to here. Go back to here. There we go. Okay, Bank of America. Lovely, lovely, lovely. All right. All righty. O Realty. Now, first and foremost, Cheddar, monthly options. 21 March, 17 April, 16 May, 20 June, 19 September, so on and so forth. Those are monthlies. That basically means I can only do it once per month. Now, you might thinking they pay monthly dividends. Well, yeah, they do. Hold on. I got something to show you. And I'm not 100% sure how you're going to feel about this. But when I first saw it, I said, oh, hell no. Now, if you're going to be playing this game, if you're going to be investing in the stock market, you really need to have access to a financial website. Someplace you can go to check out details, okay? Here, Yahoo Finance, let's take a look at O Realty. So I'm going to put O Realty up here. Check out all the details for O Realty. Here it comes. Oh, that's good. All right, I want to look at historical data first and foremost. Now, Cheddar, I'm sure you remember what I said. I'm looking for companies that are consistently profitable. Now, when I say consistently profitable, I mean each and every year they make more and more and more money. Okay, so hypothetically speaking, I want 2 decades. 2 decades goes all the way back into 2005. Well, O Realty goes all the way back to 1994. All right, well, that works. But when I say consistent profitability, the dividends will tell you whether or not the company is profitable. What do I mean by that? Because the dividend is a portion of the profits the company gives back to its investors. The very first dividend stock in 1602. Sorry, 1602. The stock market's been around for 400 years. $1602. The owners of the company, the bunch of Dutch businessmen got together and say, let's create a huge company, something the world has never seen. Let's dominate the industry. Great. So they literally went door to door. Have I got a deal for you? Invest in our company and we will promise to share our profits with you. The very first dividend stock, VOC, Dutch East India Shipping Company. 198 years. 198 years. They averaged 18% per year. The highest year on record was 78%. They paid out 78% for 1 year. But they averaged 18% a year. Now, a portion of the profit goes back to the investors, that's you and me, in the form of a dividend. So if the profits increase, think about it. Logic, reason, common sense all tells you if the profits are increasing, my share of the profit's going to increase also in the form of a dividend. So let's see how wonderful your O Realty really is. Let's go back to 2005. And here we go. 2005. The very first one. 2005. 11 cents a share. Okay. 11. 2006. 12. 2007. 13. 2008. 14. 2009. Wait a minute. Hold on. If it's 2008, it's at 14. Shouldn't 2009 be higher? Hold on. Okay, 2008, 14. 2009, 14. There's no increase in profitability. Hold on. It actually gets worse. Hold on. Okay, 2010. Check it out. It's still 14. That's 3 years in a row without an increase. 2011. Holy shit. 4 years in a row. No increase in profitability whatsoever. Hold on. It still gets worse, believe it or not. 2012. Holy shit. It's still 14. That's 5 years. 5 years without an increase in profitability. I don't know. It's not looking so good anymore. But hold on. It gets worse. It does. All right. So the end of 2012 goes to 15. All right. Then to 18 in 2013. Oh, wait a minute. 2013, it's 18. 2014, it's still 18. Wait a second. What did they increase the dividends 1 year, 2 years, and now they're not increasing it again? Hold on. Okay, 13, 14. 15, still at 18. All right, so now they got up to 19. Okay, so 5 years without an increase. 3 years without an increase, and we're only on 2015. We still got 10 more years to go. Hold on, it gets worse. Okay, so 2015, 19, 2016, 19, and then 20, and then 21 in 2017, 2018, it's still 21, 2019, 22, and then to 23 in 2020, 2021, 2003, no increasing. Okay, then it goes to 2025, it goes to 25 in 2022, 2023, 6, 2024, wait a second, wait, hold on. 2023, it's at 26. 2024, it's at 26. Okay, and then, okay, so just, all right, so we got 5 years, no increases, 3 years, no increases, 2 years, no increases, 2 years, no increases, and just now they just started to increase. Are you ready for this? It actually gets worse. Hold on. So let's go to the summary. Right here, okay? Right over here, you can pick up a lot of interesting information on a financial website. Always find a good financial website that you like. So the summary for O Realty. Okay. Do you see this right here? Hold on, I'll go over this side, makes it easier. Forward dividend and yield, 5.71%. Okay, so here's the thing, Cheddar. I'm looking at 1% per week. Now, 1% per week is 50% or more per year. You are invested in O Realty, a company that does not consistently increase their profitability. Also is only a monthly optional stock, which I can only trade it once per month, meaning 12 times per year. That doesn't work for me either. I want 1% a week, which is over 50% a year. Look what you're getting. You're getting 5.7%. Now, explain to me in a manner which I'll understand where 5.7 per year is better than 50. That's 50% per year. Why is it you think 5.71% is better than 50%? That's why I don't like Old Realty. Now, don't feel bad, because there's a lot of stocks just like Old Realty that are being stuffed down people's throats by financial advisors. Say, hey, buy this, you'll get a dividend every month. Yeah, you're getting a dividend every month, but you're only making 5.7%. Anyway, that's my thoughts on Old Realty. All right, next on the list, Slayer 1095 wants to take a look at T. Rowe Price. Now, I'm pretty sure, is T. Rowe Price a monthly or is that a weekly? T. Rowe. It is a monthly. Sorry, dude. 21 March, 17 April, 16 May, 20 June, 18 July. No, monthlies for me just don't work. Okay, you can check the numbers yourself. I'm looking for 1% per week, which would be 4 or 5% per month. And then, to make matters worse, you've got to figure out okay, this is 30 days. Okay? When you're doing monthlies, this is 30 days. You see that? 22 trading days is actually 30 days. 30 days ago, right now, okay? Where is it going next? Seriously, because if I buy the stock and I sell an option against it, now I got to figure out where the hell is it going to be in 30 days. It's not that easy. So I don't do monthlies. They just don't work for me. Sorry. And no, don't like T. Rowe Price. I'm out of time, but I have a bit to work with. A 30-year real estate broker. Cool beans. Okay, you got to give me a question, not a statement, because that's a statement. Andrea, Nike. Let's take a look at Nike for Miss Andrea. Okay, first thing I want to see is the high of the year, the low of the year. Where was it a year ago? Where is it now? And then what is the movement? Down, sideways. Big drop. That was right around the Olympics. I don't know if you guys remember that. Goes up and comes back down, back up, back down. We're at 71.86. Now, 71.86 was the closing price for today. Look at where it is after hours, 68.35. So it's going to be really challenging to figure out what's going to happen tomorrow, because these numbers, although the stock right here, which is being traded after hours, we can't trade options after hours, at least not yet. So the stock looks like it's going to drop tomorrow morning. So what do we do here? Okay, we can only go by the numbers that we have. 72, well, the 72 is going for 291. Well, 291 is more than 2%. However, let's take a look. All right, a year ago was the high of the year for Nike, 102.01. She drops, goes sideways for a bit, and then in the end of June of last year, she goes from 94 and drops all the way down 75. So 94 to 75 overnight. Now, I always tell people, if you have a profit and you don't take it, don't be surprised if the market maker takes it away from you. Because the market maker can do this. He can close one day here, 94. The very next day, he can open it up at 75. And you just lost 20 some odd dollars per share. Okay, this is not a game for the lighthearted or squeamish. Okay, so she drops, goes back up, drops again, goes back up. So here we are right now, the last 90 days. Now, I like looking at the last 90 days because I'm looking for a pattern. Because we buyers and sellers, well, we're a fickle group. We like to do the same things over and over and over again. Oh, there we go. Get that reflection off my screen. Sorry. Lights reflecting on my screen. I'm looking for a pattern. Down, up, down, up, down. Well, what's going on here? Well, let's zoom in a little bit tighter and look at the last 30 days. 30 days. Here we go. 30 days ago, we're at 77. Jump up to 82. dropped all the way down to the bottom at 71. Now we're just kind of going sideways. So there's no real rhyme or reason here, but hypothetically speaking, if your 30-day highs here, 30-day bottoms here, eventually this thing should go back up. But when is that little choo-choo train leaving the station? I don't know, Andrea, but you might want to keep an eye on it. When is it going to take off? And I can't look at numbers for you because it's actually trading at this moment after hours less than what it closed at. Tetcher, I'd love to hear more your feelings about, we already did that. Cool beans. Ask a real one. I have no idea what that means. Okay. Ask a real one. Thank you for that, real one. Paul Athwal. Vista, please. Okay, Paul, do me a favor. You got to give me the ticker symbol. Okay, so if you don't give me the ticker symbol, you're making the assumption I know what stock that is. Never heard of it before. Now, Paul, what I'm looking for are companies that are consistently profitable. All right, now those specifically, if you guys got a pen and piece of paper, you might want to write this down. Nizar, what's happening? Nice to see you over there. How do I feel about dividend ETFs in general? Okay, Nizar, you got to give me one in particular so I can take a look at it. Now, back to you over here. Okay, Paul, when I say I'm looking for companies that are consistently profitable, I'm looking for 2 decades of profitability, which would put them into a group called the Dividend Kings, the Dividend Aristocrats, Dividend Champions, or the Dividend Contenders. Now, Vistra, never heard of it. So you got to give me the ticker symbol so I can take a look at it. Looks like past 5 years, Bank of America jumps a bit at the end of March. Someone double check it. Silver guy, let's check that out. Bank of America, BAC. Okay. Here's where we are at Bank of America. We've already seen this. Now, what he's asking about is what's called the seasonality. Now, if you're not familiar with seasonality, you kind of are, but you might not be where it comes to the stock market. Seasonality, winter, spring, summer, fall. Okay, you all know that. So, different when you're in the stock market and you talk about seasonality, certain stocks react a certain way right around Christmas, right around New Year's, right around Easter, right around Thanksgiving, right around Labor Day, summer, schools getting out, schools getting in. Stocks react a certain way because guess what? Well, Easter comes every single year. Well, so doesn't Halloween, so doesn't Christmas, so doesn't Thanksgiving. They come every single year, a certain season. Also, seasonality has to do with the weather because we all know nobody wants to put their air conditioning on up north in December or put your heater on in July. No, it doesn't work. So certain stocks react differently, directly related to the weather, which is directly related to seasonality. So let's take a look at the seasonality chart because they actually have one of those. And I will explain it to you briefly. Now, as we're looking at the seasonality chart, all the way to the far left is January 1st, all the way to the far right is December 31st. It is the whole year. Now, somebody came up with a cool idea of tracking the stocks. How do they react on a seasonal pattern? Okay, so here's January. Here, the blue line is this year. This little blue dot right there, that represents today. Okay, so she went up, she came down, now she's bouncing back up again. Now, what he's talking about is that Bank of America has a tendency to go down in March. Well, right there, see it? So we're going to zoom in a little bit take a good look. Now, this is this year. Now, this red line right here is the last 10 years. That's 2015. 2016, 2017, 2018, 2019, so on and so forth for the last 10 years. Average movement. Down in the month of March. This one did the exact same thing. Now, is it guaranteed? No. There's only 3 guarantees in life. Okay? Death, taxes, disappointment. Get used to it. Okay? Simone is in the house. How you doing, Simone? Larry Brown. So I set up a Robinhood account. All right, Larry Brown. Cool beans. A statement. Larry, got a question? Let's hear it. Into the blue. should margin be used when purchasing dividend stock? Okay, so into the blue. Let me quick give you a rough idea of what is good about margin and what is bad about margin. Now, a margin account, basically you're using borrowed money to trade with. Now, some of you people may be okay with that. Some of you might make your tummy cringe. I don't know. But you're borrowing someone else's money. So when the stocks go up, you make $2 for every dollar you have in. But when the stocks go down, you lose $2 for every dollar stock goes down. Now here's the thing. Stocks can and do fluctuate up to 50% throughout the year, which means if you buy it today, there is a good chance that it could drop 50% before it retraces. Look at the high for Bank of America. It's 48. Look at the low, 34. Not the greatest in the world, but hold on a second. Take a look at Walgreens, WBA. Whoops. Where is it? WBA. Okay, the high is 22. The low, 8. That's more than 50%. Hold on, Kohl's did the exact same thing. Okay, the high of Kohl's is 30. The bottom of Kohl's is 850. That is a 70% decrease. So if you have a margin account and you bought up here, yeah, guess what? You're wiped out. So margin is good if you know what you're doing. Okay, and if you've done it for a while. Now, I have a margin account, because I've been doing this for 20 years. I'm pretty good at it, and I'm not... I had a margin call this week. I had a margin call last week. Stocks are going down. Yeah, I got 2 margin calls already. It is what it is. Don't play the game if you're not ready. Oh, don't do the crime if you can't do the time. No, don't do it. That was Beretta, wasn't it? Ooh, that's good stuff. All right. Cheddar. If you can afford to cover potential losses, absolutely. I have no idea what he's talking about, but alrighty. Ooh, Snowball. Oh, Showball. Showball wants to take a look at Apple. Now, AAPL. Apple, check that out. The high, the low, where was it? Where is it? Look at the momentum. Down, up, down, up, down, up, down. Now she's going up. All right, cool. Let's see what the numbers look like. Let's move this over. We're at 214. The 215s are going for 335. That is over 1.5% per week. 1.5% per week. That's like 70% per year. Well, that's nice. Now, do I like Apple? Well, let's take a look at it. Now, just to let you know, Apple does not have 2 decades of dividend, yet it is in my roster. Why? Well, because it's on Warren Buffett's list. And if it's on Warren Buffett's list, it's going to be on mine. If it's good enough for old Warren, it's good enough for me. So, a year ago, 176. The middle of April, 164.32 is the bottom. She shoots up in June and just goes sideways for a whole bunch of months. But look at the last 90 days. Last 90 days, we have our high for the year. Okay. She went up, she went down, she went up, she went down. Now it's bouncing off of this. Take a look at that, 214. Let's back this up for a second. Is that the low of the year, 214? No, it's not. See, the low of the year is here. Now this is a new 30 to 90 day low. Okay, so it's a 90-day low. Last 30 days, right there. Now check this out for 30 days. 30 days ago, we're at 245. She shoots up to 250 and then drops all the way down. $40. Now, $40 on a $250 stock it's over at least 15 to 16%. That's a big drop. Well, now here at 210, she's starting to go up. But look at all of that space it has to go. Now, one thing I love about Apple stock, check this out. Let's move this over a little bit. Check out the seasonality on Apple. Look at that. How can you go wrong? January all the way to December. 10 years. It's like, keep going up. Why not? All right, so we're right here right now. So we're going to go up a little bit, sideways, and up a little bit, then sideways and up a little bit. All right, that's where we are now. Now, I like Apple, so let's take a look. Let's do this. Let's do this. Let's do this. Sounds like a foghorn. Let's do this. All right, anyway. 214 to 215s. Let's do the 215s for Apple. Why not? Right? Why not? We're here. Let's do it. See what it looks like. The 215, here it is. I'm just going to do one contract. Now, you're going to feel a little uncomfortable when you see what 100 shares of Apple is going to cost. But it all comes out at the end. Here we go. Buy one covered call of Apple. 28 March 25. Well, that means it expires next Friday. The 215 call option against the Apple stock at the market to open. To open, we're doing two trades. Buying stock, selling the option. Doing two at once. It's a 2-for-1 sale. Yay! All right, anyway. My maximum profit, $430 per share. Sorry, $430 per contract. And that comes to $21,000 to buy 100 shares of Apple. But let's check out the rate of return. That might surprise you. Get my calculator, clear that. 430 is my profit. Remember, simple, safe, predictable, and consistent. 21,070, 21,070. Get a grand total of 2%. So here's an interesting one for you. Now, you could invest $21,000 to make 2% on Apple, or you can spend, what was it for Bank of America, like $4,000 or $5,000 to make 2.2%? It's still 2% on your money. Okay, but Bank of America is a lower dollar stock. So yeah, $5,000 you make 2%. $21,000 you're still making 2%. It's a numbers game. Okay. Zamina, how are you today? Toucher into the blue. If your dividend offsets margin cost, also yes. Okay, Cheddar. Silver Guy, so you're hoping to collect the difference as opposed to getting the premium. No. Nope. I'm looking to get in the premium. Mikey, what's happening? What are your thoughts on overpriced coffee? I like overpriced coffee. The funny thing is, my ex-wife used to work at Starbucks. It's not really coffee. Okay, they get these big, huge packages, and they scoop out a little bit and dump it in some water. They don't ground the beans, and you can smell the aroma of coffee. No, it's not like that at all. It's all processed, ready to go. Don't get me wrong, it tastes good. But what the hell's in it to make it taste good? It's not coffee. But let's take a look at Starbucks. Starbucks is on my list, believe it or not. And yeah, I did buy some Starbucks last year. Get out of that. Get out of that. Get out of this. And back to the beginning. And let's put in some Starbucks. SBUX. There we go. Starbucks. Now, we're always looking at the same thing. You ready? Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, up, down. Now she's going back up again. 99.28. The 99 is going for 178. The 100s are going for 124. Both of those are over 1%, whichever one you want to look at. Now, the 99 is a safer trade. The 100 is more profitable, but not as safe. It's always a numbers game. Okay? What is the safest, most predictable place for me to put my money? That's what I'm looking for. All right. A year ago, Starbucks at 92. Now, looks like we have a double bottom at 71.55, once in May and again in July. May and July. Okay, she shoots up in August and goes sideways all the way until the beginning of December. Here's your last 90 days. The 90-day bottom, the 90-day top. Look at that. Up, down. Now she's going back up again. Great. What's the last 30 days? The last 30 days gives me a good idea of where it's going next. Here we go. Now, that's pretty self-explanatory. 30-day high, 30-day bottom. Okay, she went up, pulled down. Now she's going back up again. Very slowly, though. Okay, so 99. What's the 99 look like? Let's do one for the fun of it. No, that's not what I want. The 99 is covered call. There it is. The 99 right there. Okay, one contract of Starbucks at the market to open. Here we go. Buy one covered call of Starbucks 100. That's the weeklies. 28 March 25. That's next Friday. The $99 call option against the stock at the market to open to open. 152 is my max profit. It's going to cost me $9,748.67. Well, what does that sound like? 152 divided by $9,748.67. That comes to a grand total of 1.55. Now, 1.55, it depends on what it is you're looking for. So you got a couple of questions to ask yourself. Question number one. Okay, Mikey, question number one. Does it make sense? Buying a stock at a certain price, selling it basically the exact same price, collecting a premium. Well, premiums, cash flow, same thing. Okay? And then if it hits a target, you get all your money back and you still get to walk away with that profit. Well, it kind of makes sense to me. Second question. Do I like Starbucks? Third question. Do I like Starbucks at this current price? Fourth question. Am I willing to buy Starbucks, hold it until the day I die, or until it hits my target? What's my target? 99. Well, what's it at right now? 99.13. You see where I'm going with this? I'm buying it at 99.13, selling it at 99, walking away with $150 per contract. So let's say I have 90,000. That's 10 contracts. That is 1,000. That's $1,500, which is still going to be 1.55%. Okay, more money doesn't mean more money. It just means the same percentage. All right. Next. Damn it. Much better. All right. Next. Who do we have next? Thank you for that, Mikey. Okay, I can't really read that name, MHMD. HMD. What the hell kind of a name is that? Not insulting your name. It's just hard to pronounce that. Med. I don't know. Solana, you actually got to give me the ticker symbol. Crystal, what do you think will happen in the next few months? What about the next few years? Well, interesting thing, Crystal. All right. Now, I've only been here for 61 years. So I don't think the world's going to end. Okay? I think you're going to wake up in the morning and you're probably going to go to work. And then you'll probably get out of work, collect your paycheck, probably pay some bills, maybe go out, enjoy, a night out for the weekend, and then maybe do the exact same thing again Monday. Because basically, that's what we've been doing. Well, that's what I've been doing since, I got out of high school. Going to work, contributing to society, taking my paycheck, doing something fun and exciting for the weekend, and then going back to work on Monday. I don't really foresee life changing very much other than that. Yeah, we're going to get a little bit more BS from the bureaucrats because we've been getting BS from the bureaucrats as far as I can remember. Okay, nothing has really changed. Okay, I remember in the 70s, we had a bunch of bullshit with Carter, and then we had a bunch of bullshit with Reagan, and then we had a bunch of bullshit with the Bush boys. It doesn't change. It doesn't matter if it's a Democrat or Republican. We have issues, and we're going to have issues. Okay? User, I have no idea. Okay, if you have such a low risk appetite, why not just invest in fixed income securities? Okay, user, you're not the first person to say that. But you're also not the first person who say that who didn't come up with an alternative that would give me 50% per year. If you have a fixed income security that pays 50% per year, I'm more than happy to just sit back and do absolutely nothing. But as far as I know, now I've been doing this for over 20 years. As far as I know, there aren't any fixed income securities that pay 50% or more. All right? So until there is, I'm going to keep doing this. Melodic Angie, hello and good evening to you. Jeff Jerzik, how are you doing tonight? Nice to see you again, brother. Kev, what's going on? Can you do more than one contract on stocks like one of the 100 shares and 10 another for 100 shares for the same expiration date? Okay, Angie, you can do whatever you want. Now, let me just show you something. Come on. Ford, Harley-Davidson, Intel, Kohl's, Macy's, Altria, Riley, U.S. Steel. Now, this is just one of my accounts. I got 7. Each and every one of those has an option written against it expiring this week. So, yeah, you can do as much as you can possibly afford. If you can afford to do a whole bunch, well, then do a whole bunch. Okay, if you can only do 4 or 5, then only do 4 or 5. Do whatever you are comfortable with because we are all different. Now, anywhere between 5 and 20,000 people will come across this website tonight. Now, we're all different. Now, between 5 and 20,000 people, not everyone, I'll be hard-pressed to say no 2 are the exact same. So what I do is going to be different than what you do. Okay. Oh, Dan, help. How are you? Can anyone tell me why Robinhood doesn't allow queuing on covered calls? Okay, Silver Guy, I actually have a Robinhood account, and I do covered calls on Robinhood. I'm not 100% sure what you're talking about queuing means. Okay. ABR has weeklies. I don't think so. Okay. Now, I'm not going to call you a liar or anything, but let's go to ABR and let's look at the financials on ABR. ABR. Okay, now here's ABR right here. Okay, Arbor Realty Trust, ABR. Okay, now let's take a look at historical data. So if you're right, historical data will give us a weekly dividend that shows on the historical data. So let's check it out. Now, it may have monthly dividends, but not weekly. Okay, historical prices, dividends only. Let's look at all the dividends. Okay. March 24, May 24, August 24, November 24. That's every 90 days. Now, it may have weekly options, but it doesn't have weekly dividends. It has a dividend every 90 days. And take a look at this. 40, 40, 42, 43, 43, 43, 43, 43, 43, 43. There's no increasing there whatsoever. Okay, 2023, it was 43. And it's still 43 in 2025. That's 3 years. No increase at all. Yeah, no, thank you. I'll pass. ARB. Wait a second. Didn't you just... Oh, ABR. 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 Okay, so ABR has weekly options. Not weekly dividends, weekly options. And no, I don't do ABR because you just saw the dividends. They're not consistently increasing. Now, we looked last week. Actually, we looked a couple of days ago. There's 9,970. That's almost 10,000 different companies that you can invest in at any moment in time. Now, I'm looking for only 2 criteria. 2. That's it. Consistency of profitability, which means 20 years or more of increased dividends. And there's a whole bunch of those. There are. But the second criteria, weekly options, well, that just brought the list down to about 300. So there's only about 300. Out of 10,000, there's only about 300 that fit, that I'm looking for. Other than that, I honestly, and don't get me wrong, ABR may have the nicest people in the world. But if it doesn't fit, I'm not going to buy it. It's just that simple. I mean, I can go to the shoe store and look at all these nice shoes. Girls, you can go to the dress shop and look at all these nice dresses. If it don't fit, don't buy it. Okay? Can I look at PLTY and give me my opinion into the blue? Of course I can. But before I do that, I want to go here. PLTY. PLTY. All the dividends this has. Okay, see, now I have a minor problem with PLTY. Here it is. This thing's barely a year old. 1, 2, 3, 4, 5. 5 dividends. It's all it's paid. Okay? Unless they're paying once every 5 years, then that would work. But no, this is paying every 90 days. Holy shit. No. What is that? November 2024. December, January, February. This thing's only 5 months old. Yeah, no thank you. Okay, into the blue, 5 months. No, doesn't work for me. Okay, see, now, if you are still young, like a couple of you guys are in your 20s, I saw that. This might be great for you guys. Might be. I'm 61, going on 62. I'm retired. I don't have the luxury of screwing up. Okay? If you're in your 20s, 30s, even 40s, you can jump into something like this, a company that's not even a year old. Not me. Because if I am wrong, if this goes belly up, because most companies never make it past 3 to 5 years. Most companies don't make it 3 to 5 years. This thing's not even a year old yet. Yeah, no thank you. Not for me. For you, it might work. Okay? I don't know. But 2 decades of consistent profitability is what I'm looking for. Melodic Angie, I'm so confused. I did a covered call on Hewlett Packard and received $10.32 premium. I went on Thinkorswim and saw that I could have made 80. How is that possible? Angie, I told you this yesterday and the day before. Okay, from the conversations we're having here, it might be a good idea for you to drop me your number and we can chat. I can sit on my computer and walk through it with you. Okay, but what you're saying, it makes no sense. Hewlett Packard, HPE, okay, at this moment in time, it's at 1623. Okay, so the 16s are going for 29. Yeah, that's not going to work. The 1650s are going for 20. Okay, now 20 cents a share on a $16 stock is over 1%. All right, great. Well, let's see what it looks like. Let's get rid of this. Let's get to this. Let's get to that. Let's do the 1650 right there. Let's do one contract. I'm going to assume you did one contract. Okay, at the market. There we go. And confirm and send. Okay, so one contract, hypothetically speaking, Angie, $47. Buy one contract, HPE, Hewlett Packard, Okay, 100, 28 March 25. That's this coming Friday. Not tomorrow, next Friday. Okay, the $16.50 call option on Hewlett Packard at the market to open. You should have made $47.50 for one contract. It would have cost you $1,600. Okay, so if the stock is over $16.50 come Friday, okay, you get your 47, and then you get the difference between $16.50, which is the strike price, and the purchase price $16.13, which is another 37 cents. So that's 37 here, plus along with that, about $75 hypothetically, if it hits $16.50. Okay, so like I said, without seeing, in our morning trading group, I'm not trying to sell anyone anything. Okay, now I do have stuff to sell, but I'm not going to pitch anyone anything. Okay, let's get that clear. On my morning trading group, which is a paid service, okay, we actually take a look at what it is you're doing. Now, it may or may not be worth it for you to pay, for 1 month's access, because you get to ask, and I get to see everything you're doing and work you through it. Okay? So remember, what does it mean to you to learn it? Now, you can come here every night and ask questions, but I'm limited on what I can do by just reading what you're doing. If I'm not actually seeing the trade in front of me, it's hard for me to decipher through just a couple of paragraphs. I don't know if that makes sense or not. Okay, but let's keep on going. So Angie, I'd love to have a conversation with you if you want to do that. My first covered call was on E-Trade. Ugh, I don't like E-Trade. I used to do it years ago. I did write a book, Angie. I wrote a book 15 years ago on choosing the right trading platform. Okay, I chose this one 20 years ago, and it stays the exact same. They haven't changed it. It's one of the things I love about it. They haven't changed it at all. They haven't said, ooh, we're going to make it better. No, it works fine. Leave it alone. All right. Need a t-shirt that says, but hold on. It gets worse. Actually, hello, Jennifer. Thank you for that. But think about it. Jennifer, you bring up a good point. If you are going to be, take this money. That's a good one. If you're going to be investing your own money, don't you think you should look at certain things? Like such as, is this company consistently profitable? I mean, think about it. The stock market's been around for 400 years. If you have the opportunity to buy a company that has been doing nothing but making more and more and more and more money every single year, why wouldn't you? It just makes sense. Take this money. I like that name. Take this money. Explain what you do every week to make weekly money, please, step by step. Realm Sync, how are you today? That's a big ask there, dude. Let's get out of here. Let's change this to single. And let's go back over to here. Well, wait a second. Let's back up for 1 second. First thing he wants to see exactly what I do every single week. Well, here it goes. You ready? I'm going to do this relatively quick. I don't want to give away all my secrets, but here we go. Step 1, find stocks that you like. Are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's at this 5 list right there. You 300 companies that are consistently profitable. 2, put it into a dividend calendar. A dividend calendar is nothing more than a regular calendar, but it tells you exactly when the stock is going to pay the dividend. Why? Because a stock has a tendency to increase in value before the dividend is paid. Knowing that a stock is going to move at what time is an awesome tidbit of information. Now, what do you do with it? There's a lot of trading strategies out there. So this strategy was created for my 9-year-old daughter. It had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. So, first and foremost, if it is on the list, If it is on the chart, if it is on the calendar, that's what you're going to look at. And you're only going to look at the ones for this week. Only these stocks here. Not those, not those, not those, not those. Just this week. That is it. 2, then you take that stock and you go on over to the trading platform. You throw it into the trade grid, pop it up on the chart, you'll look at the chart. The first chart I want to see is the 1-year chart. I'm looking for 5 things. Every chart, 5 things. The high, the low, where was it, where is it, which direction is it going? Up, down, up. Great, it looks wonderful. Then I want to go to the seasonality. Wait a minute, then I want to go to the 90-day chart. Same thing, high, low, where was it, where is it, what's the movement? Sideways, down, up, cool beans. Now the 30-day chart. High, low, where was it, where is it? Look at this, down, up, awesome, love it. Now I want to go to the seasonality chart. What does it normally do this time of year? Okay. Here's where we are today. Here's where it normally goes. Now I want to jump in and take a look at the next couple of weeks. What do I expect it to do? Oh, look at that. Here we are. It's going to go up, going to go sideways for a bit, then it's going to go down. Wonderful. I like that. Now let's go back to here. Everything looked good. Now we are at 1625. So this is going to be a tough one because I got a choice. 16 or the 1650. Either one is going to work. Okay? The 16 is going to give me 29, but I'm going to lose 25 cents right off the top. That's going to be a no. The 1650 is going to give me 20. That's more than 1%. Okay, 16 cents is 1% of 16. All right, so the 16 is going for 29 cents, but I'm buying it at 16.25. That's not going to work, so it's a 16.50. It's a mathematical equation. 1 plus 1 equals 2. Yep, good, let's do it. So change it to covered call. There we go. The 16.50, there it is. Okay, well, you know what? I do 10 contracts, so just deal with it at the market. There we go. And here we go. Buy 10 contracts of HP at the market. 20, all right, sorry. Buy 10 covered calls HPE, which is Hewlett Packard. 28 March is when it expires. 16.50 call option gets a stock at the market to open. $475 is my investment. Is my profit. My investment $16,000. So let's get my calculator out. Come on, calculator. Clear that. 475 divided by 16,031 gives me roughly 2.9%. So I can do 2.9%. There you have it, from the beginning to the end. Voila. Now, from here, it's just looking at it every day. What did I buy it for? What option did I sell against it? Great. What's the stock price now? What's the option price now? Am I at risk of being called away? Am I at risk at losing? Okay, 2 kinds of questions. Nazar, SCHD ain't happening, dude. Okay, when I say 5 rules, you ready? Here comes the 5 rules. Nazar, you ready? Rule number 1, never buy something you don't understand. So apparently you don't understand SCHD because you're willing to buy it. Well, if you're willing to buy it, you're definitely in the wrong place. SCHD is so wrong on so many levels for this strategy here. This is the only strategy I teach here for free. Now, I know how to do all the other strategies, but this is the only way I give away for free. That's it. All right. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. SCHD isn't. Weekly options. SCHD isn't. And then make sure the numbers work. Okay? That's it. It's either yes or it's a no. Then it comes down to the other 5 questions. Question number 1, does it make sense? Question number 2, do I like this stock? Question number 3, do I like this stock at this current price? Question number 4, am I willing to buy this stock and hold it for the rest of my life or until it hits my target? My target, $16.50. Okay? And then question number 5, do I have 5 or 10 minutes every day to look at my funds or my money and to make sure I am going to be consistently profitable? So that was explain what I do every week from beginning to end. Step by step realm. Hope you're happy. There you go. What do I think about Eli Lilly? Overpriced. Love. What a lovely name. Let's take a look at Macy's. Let's take a look at Macy's. For Miss Love. Exciting and new. Come aboard. We're expecting you. All right, anyway, back to here. And she wants to take a look at Macy's. Now, Love, I do actually have some Macy's. Macy's was my #1 stock last year. Not my most profitable, but my #1 go-to. If I had extra money, I always dumped it into Macy's. Macy's and Walgreens last year, my 2 best stocks. Here we go. The high of the year, the low of the year. Where was it a year ago? Where is it now? Look at the motion. Down, sideways, down, sideways, down, sideways. We're at 1337. We'll be looking at the 1350s. The 1350s are going for, let's move this over so we can see it better. The 1350s are going for 7 cents to 30 cents. So you might be able to get your 1% out of that. But does it make sense to buy it now? Look at the last 30 days on Macy's. Okay, so here's your last 30 days on Macy's, and that's pretty plain to see. It is in a downturn. Okay, the last 30 days are here. She went back up, but then she's dropping back down again. So she's not fighting this downturn. She's not finding the bottom and turning around, at least not yet. The bottom's here. Okay, we're looking for the bottom, and then we'll turn around and go back up again. So I do own Macy's, so yeah, I'm a little bit, in the red with Macy's, but it is what it is. Don't play the game if you're not. Well, don't do the crime if you can't do the time. No, don't do it. All right. Freezing in Iowa. You want to look at WiMAX. Dude. Uh-oh. I hit the wrong button. All right, WiMAX. Okay, freezing in Iowa. WiMAX. You're not the first one to ask about WiMAX, and you're not the first person I'm going to tell you WiMAX isn't that great. Okay, not even 2 years old yet. October 2024. 2 years. Not even 2 years old yet. Yeah, no thank you. What's my favorite stock? Macy's. Sin the Vitke? Sin the Vitke. Okay. Shanabe. Shanabe, how are you doing? Algae. Okay, cool. Hyperion Grande. Okay, Hyperion Grande. Cool. Israel's Chosen. Interesting name. Papa Laos. Good evening. Lockheed Martin, huh? Oh, let's take a look at Lockheed Martin. LMT. Lockheed Martin. All right. I really don't do stocks over $250, but I'll take a look at it for you. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up. 467. The 467.50s are going for 540. Okay, that works. Yes, love, we just did Macy's. A year ago, Lockheed Martin's at 440. Then she jumps up to 620. 440 to 620. Well, that's a $180 move. And then she drops back down to 420. Now she's back at 466. Well, look at the last 90 days. High, low, is. Look at this. Up, down, up, down, up, down, up. Okay. Alrighty. Last 30 days. Dun, 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 dun. I'm going to say no. Only because here's the 30-day bottom. Here's your 30-day high. It comes back down. Now she's going back up here. She's coming back down again. It's not as clear as I would like it. I like clear cut, simple, easy to read. When it looks a little complicated like this, I'll say, you know what? There's too many other stocks to pick. All right. Is your YouTube video thumbnail frozen? Uh-oh. Let's check a look at that one. YouTube. YouTube channel. Sorry, just got to, minor technical difficulties. No, that one's working. See? Hi. That one's working. Yep. No, that one's working. Yep, see, that one's working. Now, how about this one? Nope, that one's working too. Sorry, it's got minor technical difficulties. Oh, the picture of me is frozen. Okay. All right. The video. Okay, so let's go back to here. Go back to here. Go to here. Video. Okay, my video camera froze. Let's get rid of that. Let's do it again. Video capture. There we go. Yes. And yes. Okay, it's frozen. It don't look like it's working. So let's just get rid of it. Looks like it's time for a new webcam. All right, time for a new webcam. That's it. All right, so that being said, let's keep on going. Thank you for pointing that out. Thanks, Paul. The zombie killer. How do you get involved? How do you get involved? Or how do I get involved? But zombie killer, up in the top left corner is my website. Okay, you go to the website and you just hit the very first button that says live trading. Okay, now I said I promise I'm not going to sell anyone anything, so he asked, so I'm just telling him where it is. Okay, Wise Family, how you doing today? Deeds Power Wagon. Ooh, I'm kind of curious which Power Wagon you have. They first started making the Power Wagon in the 1930s. Which one do you have? It's an awesome truck. And you, Bank is great firm. 22 Future, and you, Nucor, and you, and you. Okay, here we go. Here's our high, here's our low, here's where it was, here's where it is. Look at this, down, up, down, up, down, up. 1142, the 1150s, 24. That's over 2%. Well, let's take a gander. A year ago, we are at 1192. The bottom of the year was at the beginning of August at 967. All right, the top of the year, right there in the middle of November of last year, 1615. Last 30 days. Okay. Look at your last 30 days. Here's your high, here's your low. Now she's going up, but pulling back. Okay. Now, think about this for a second. Here's the high. Let's get rid of that one because it's only got 1 day left. It'll be gone in a day. Okay, so here's our new 30-day bottom as of tomorrow. Okay, 30-day high. Yeah. Not a good place to get it. 30 days ago, drops down, shoots up, now comes back down again. Sorry, the numbers just don't work. Saad, I don't know, S-A-A-D, Saad, X-Y-L-D. I'm going to say no if you want me to, but take a gander. What is it? X-Y-L-D. X-Y-L-D. All right, so here's XYLD. They incorporated, or first one is 2013. Let's go all the way back. Let's go just to 2005 because that will be 20 years. Wait a second. 2013. Where's my 20 years? Oh, it's only 2013. This is only 12 years old. So XYLD is only 12 years old, brother. I want 20. 2 decades. 20 years. But let's take a look at this one for a second. Just for the fun of it. All right, 2013. It's at 4, 15, 5, 4, 7, 76, 2, 14, 5, 3, 8, 5, 4, 21, 17, 25, 18, 68, 19, 7, 7, 13, 7, 19, 6, 37, 40. There's no consistency there whatsoever. No consistency whatsoever. What I'm looking for, let me see if I can show you one, give you an idea what it's supposed to look like. Let's go all the way back to 2005. You ready? Saad, this is what it's supposed to look like. You ready? 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. That's what consistency of profitability looks like. If you're going to look at a company and read the numbers, well, read the numbers that make sense. What are their profits looking like? Now, yeah, I could go to the quarterly and annual reports and take a look at 20 years of annual reports and see how profitable they are. Or I can go straight to the dividend. Because if the dividend is a portion of the profits that the company gives back to the investors, well, if the dividends go up, the profits go up. If the profit goes up, the dividend goes up. They go hand in hand. Why do I want to read all that crap when if the profits that they're giving back to the investors increases every year? Well, that works for me. It's quick, it's easy, it's right to the point, and as you can see, each and every year, it's higher and higher and higher and higher. Why would I ever go with a stock that's not consistently profitable? There's 9,970 different companies. We looked up the other day. I look every single week. I go to a website called FinViz, Financial Visualizations, and it gives me a breakdown of all the other companies that I can invest in. Okay? As of Monday, this week, 9,970. Why would I do XYLD if they're not consistently profitable? Now, if you like them, great, more power to you. I don't tell people what to buy and I don't tell people what not to buy. I'm just giving you my opinion. My opinion on XYLD? No, thank you. Paul, VST. I got this up. I might as well put it in here. VST. $2016. Hold on. Where's 2017 and 2018? And this thing's only 5-6 years old. Yeah, no thanks. David, I like Mara. I actually have some Mara. M-A-R-A, tra-la-la-la-la-la-la-la-la-la-la. Okay, Mara. All right, here we go. A year ago, we're at 2087. The top of the year was at the end of November. That was 30.33. Look at 30.33 is the high of the year. $12. That's more than a 50% drop. If you can't handle a 50% drop on a stock, you shouldn't be playing this game. Because that's what they do. Here's your low of the year. Here's your high of the year. That's more than a 50% difference between the two. And also, you shouldn't be buying at the high. That's when you should be selling. Okay? Down, this is where you buy. Up, this is where you sell. Down, this is where you buy. Up, this is where you sell. Down, this is where you buy, sell, buy, sell. Okay? Buy low, sell high. You've heard it over and over and over again. So Mara, for the last 30 days, Here we go. 30 days ago, 16. Then it jumps up to 16.50. Drops down to 12. Shoots up to 16.25. Drops down to 12. 2 days to the upside. This is what me, consider a perfect opportunity for me to jump in. 30-day bottom. 2 days to the upside. A higher high and a higher low. Higher high and a higher low. You cannot argue with that. Try as you will, but you cannot argue with that. 2 days to the upside from this bottom here. Okay? What am I buying it for? Well, it's currently at $12.50. The $12.50 is going for 55 cents. That is just this much below 4%. Okay, 4%. Yeah. Well, let's try it. Let's check it out. All right, so let's get out of here. Let's change it to covered call. Let's do the $12.50. One contract at the market. Here it is. Buy one contract. One covered call. Amera 100. That's the weekly. 28 March 25. That's this, not this Friday, which is tomorrow. Next Friday. So that's about 8 days away. The $12.50 call option against the Myra stock at the market to open. 2 trades. Buy stock, sell the option. $51 is my profit. See? Maximum profit. $51. What's it costing me? Maximum cost of trade, including commissions and fees, $1,199. That's $1,200. I'm not going to quibble over 34 cents. Okay. $51 is the profit, divided by $1,200. Comes to a grand total of 4.25. I'm going to write that one down. Nice. All right, let me just briefly read this to you really quick. Now, for some of you guys, well, this is being recorded, so if you wanted to listen to it again after we're done tonight, go on over to YouTube, The 10-Minute Trader, and re-listen. Here we go. John Deere 1.7, Comcast 1.48, Cisco 1.3, NTAP 1.97, NTR 1.92, Siri 2.49, Alcoa 2.48, Hewlett Packard 2.59, ASO 5.74, Foot Locker 3.2, Harley Davidson 2.6, Intel 4.16, Ford 1.33, Macy's 1.3, Citigroup 1.3, Morgan Stanley 1.4, Walmart 1.3, Key Bank 2.3, Dell 2.8, Riot 6.2, PPG 1.45, Apache 3.1, Kohl's 2.67, Bank of America 2.2, and Mara 4.2. That's what we found so far this week. Okay, now look at all the stocks we had to go through. Okay, that's a whole bunch. But that's at least 20 halfway decent stocks. I wouldn't mind owning any one of those. All right. The left side of your monitor does not display on your phone. It doesn't. It looks like it does. I don't know which camera you're on. Something of value. Hold a second. YouTube channel. Actually, it is. It's showing the whole screen. Actually, it is. It's showing the whole screen. Actually, it is. It's showing the whole screen. What's that? Tra-la-la. That's it doing it. It's showing the whole screen. Tra-la-la. That's funny. All right, let's get out of that. Let's get out of that. That's funny. All right, let's get out of that. All right. It seems to be working. All right. Something of value. Sorry about that. Enderjit, how are you doing today? VC 1990. Tesher, most brokers' margin rates are too wicked to beat a dividend rate. Okay. James Brushu, how are you doing today? You want to take a look at Emerson Electric. I like Emerson Electric. EMR, Emerson Electric. They're over 100 years old, dude, and I believe they are a dividend king. Here we go. You ready? The high, the low. Where was it? Where is it? Look at this. Up, down, 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 up, down. Now here we are right here, 111.80. So be looking at the 112. So 112 is 150 to 220. That looks nice. Let's take a closer look. Whoops. A year ago, 110.98. Now, doesn't that just piss you off? Look at this. A year ago, 111. Now it's at 111. So if you bought it 5, 10, 15 years ago, last year it's at 111. Now it's at 111. But she did drop, did shoot up, did come back down. You're right back where you started again. All right, anyway, the bottom of the year, September 11th, 96.62, and then the top of the year right here, the 4th of December, 134.85. Okay, drops back up, back down. Look at it. Not that difficult to see this one. Up, down, up, down. Now what's going on right here? Well, the last 30 days, there we go. 30 days ago, we have our high right here, 125. Then she drops down to here, shoots back up, changes its mind, come back down again. So we're going to be looking for the bottom here. Haven't found it quite yet, so keep your eye on it if you really like it, James. No, I like Emerson, I do, but you got to find the bottom 2 days the upside and then jump in on the third day. See, here's the bottom. 1 day up, 2 days up. There's your invitation to jump in. However, the very next day, she pulled back a little bit. So it's like, oh, hit the brakes. So 2 days to the upside. On the third day, I'm jumping in. It just so happens that on this third day, it decided to go the wrong way. In the blue, replying to CV113, my thoughts are the same on the margin rates. Okay, so you guys, you're talking about margin rates in the conversation. Okay, I have no problem with you guys carrying on private conversations. But this is the way I look at margins. Okay? Now, if I can borrow money at 8%, I will borrow as much as somebody will lend me. I've been doing this long enough that at 8%, yeah, I'll go as high as 20% per year to borrow money. I will. You want to lend me money? I'll pay you 20% per year. No questions asked. 8%, not even a blink of an eye. Okay, now you're new here. Okay, I'm very good with names. I can tell who's been here for a while and who's just showing up. You guys are new. You're worried about 8%, borrowing money at 8%. Yeah, this game's probably not for you then. Thoughts on Microsoft? Do it. I like Microsoft. Stock Learner 4. Thank you for that. KC Dreads back again. Snowball just got the number 2 gift badge. Thank you there, Snowball. Christian DeFore back again. Where do you find the seasonality of a stock? You got to find a season. Oh, look at this. I sent you my number in your inbox this morning. Angie, I called a bunch of people this morning. I got a couple of answering machines. That could have been you. I called a bunch of people this morning. Send me your number again, and I'll try calling you again in the morning. And off you go. There it is. It's sent right to you. All right. Where are we? Where are we? Okay, keep going. I'm just going through the questions, you guys. Where did you find seasonality? Okay, seasonality, you can find that on Thinkorswim. It's on there. And you could also just go to Google and find out who else has a seasonality chart. So Do It wants to take a look at Microsoft. MSFT, a little out of my price range, because I like to stay under $250. Because if I can make 20%, if I can make 1 or 2% on a $20 stock, well, why would I look at a $400 stock? If I get, I'm doing fine with the $20 and $30 stocks. They work fine for me. Anyway, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, up, down, up. 387. We'll be looking at the 387.50s. Those are going for $5 a share. That works. That's more than 1%. So let's take a look. A year ago, Microsoft's at 424. The high of the year was in the second week of July, 486. She drops down, goes sideways for a bit. Look at the last 90 days. Okay? Last 90 days. Down, up, down, up, down, up. Okay, easy to read, not that difficult. Last 30 days, give me an idea of where she's going next. That's not that difficult to see. Check it out. 30-day high, 30-day bottom. Now she's going up, but very slowly. But look at all the space here. That's a lot of space. All right, so now you've seen a couple of low price stocks. Wait till you see this one. Okay, let's get out of here. Let's change this to covered stock. 387.50 right there. Okay, one contract. You ready to see what one contract's going to cost you for Microsoft? Okay, here we go. Buy one Microsoft. One covered call Microsoft. Okay, 28 March, which is next Friday. The 387.50 call option against the stock at the market to open. You're going to make $572.50 for one contract. But it's going to cost you $38,000. Well, let's get the calculator before you freaking out about that number. Okay, profit, $572.50 divided by $38,178.17. Gives you a grand total of 1.49. That's 1.5%. But you got to put up $38,000 to get 1.5%. But the question comes down, do you like Microsoft? Do you like Microsoft at this price? Are you willing to buy it and hold on to it until it hits your target? Okay? Me? No. I like to stay under $250. Is what it is. Jersey, you like Mara? Cool beans, so do I. James Wilson, forgot to say hello. Thanks for the call. Yeah. I had a nice call with Mr. James this morning. Armstead, what? What's happening? Lindarella, good evening, good evening. Just showing up. Cool beans. Bakit, we already looked at Misty earlier today. Paul, could you elaborate on the difference risk call strike prices below and above stock price? It's a numbers game, Paul. Okay? Seriously, think about it. Yep. Let's get rid of this. And back to where we started again. Okay, so Paul, could I elaborate on the difference risk covered call strike prices below and above stock price? All right, here we go, Paul. You ready? Let's get an easy one. This one's $400. Let's get one that's a little bit favorable prices. AT&T maybe. All right, let's take a look at AT&T. Here we go. AT&T, you ready? $26.79. That's the stock price. So hypothetically, we could go with the $26.50 or the $27 because she's at $26.79. So which one's closer, the $26.50 or the $27? So here we go. Watch this. At $26.50, right? I'm buying the stock at $26.79, selling it at $26.50. Well, I'm losing 29 cents right off the top, right? So if I'm taking the 29 cents off of here, well, I got to deduct it from here. So if I take 29 cents off of this, now I'm looking at 21 cents. Well, 21 cents is not 1% of 26.50. Well, now look at the 26.79, and now let's look at the 27, which is above the price. Okay, now the stock has to go up 21 cents. And if it does, I make that 21 cents. But look at what I'm bringing in. 22 to 27. So barely making my 1% there. So it's always going to be a numbers game. Does it make sense? Well, here it might or might not, depending. Do you really like AT&T? If you really like it, fine. Buy it at the current price, sell the 27s, bring in your close to 1%. If it hits a 27, you get this number plus the additional difference between the stock price and the strike price. Because remember, you're buying it for this price. And this here, 25, 25.50, 26, 26.50, the strike price is what you're selling it for. But you're collecting a premium right away. Now that premium goes into your account. You can spend it tomorrow or the next day. Okay? So it's always going to come down to a numbers game, Paul. What am I buying it at? What am I selling? Am I winning? Am I losing right off the bat? And if so, at the end of the week, if it's in the money, what am I walking away with? Ultimately, what am I walking away with after this is all said and done? Am I making a profit? How much is that profit at this price? How much is it how much profit is it at that price? So do the balancing. Okay? Now, the 26.50, you don't have to do anything because it's already above 26.50. But the 27, the stock does have to go up. But if it's in an upward motion at the moment, it probably will hit 27. And, well, you're not going to buy it anyway. Well, I mean, you're going to buy it anyway if you like the stock. It's, just that simple. Alan, PayPal doesn't have dividends. Pedro Gutierrez, ¿qué pasa, amigo? Celsius? No, Celsius does not 20 years old, dude. Mike, thank you for following. Alan, it's nice to see you. Pedro, thanks for showing up, but CELH is Celsius. And Celsius is not 20 years old. Why? Ooh, why ask why? You're back again. Haven't seen you in a while, dude. Are you always hoping to have your covered calls called away? Yes, I am. Okay, if I buy this, 26.79, I sell it at 27, and it hits 27.01 on Friday, see you later. I want my 1% every week. How do I get it? Really don't care. Stock appreciation, thank you. Dividend, thank you. Premium, thank you. I always want to make sure Monday morning when I'm buying my stocks, what is the simplest, safest, and most predictable way for me to get my 1%? Okay? I've been working since 1973. I have X amount of dollars. Those X amount of dollars are going to last me for the rest of my life. And we are the only species on this planet that's got to pay to live here. So I want to make sure I'm making my money and that I'm safe. Okay, Zima Jones, how are you today? Is it good to invest in Amazon? Not for me. I don't like Amazon because they're not consistently profitable and they don't have any dividends. Angie, Angie, your thing just disappeared. All right, Angie, I'll take a look at that. VC 1990. ABR has weekly options. You're absolutely 100% correct. It does. But what it doesn't have is 20 years of increased profitability. Okay? There's almost 10,000 stocks. ABR is not consistently profitable. For me, it's a no. That's a no. Okay, Angie, can 2 contracts be done on the same stock that expires on the same week? 100 shares and then repeat, or does it have to be a different stock? 1 contract. Okay, Angie, I'm not 100% sure I understand that question, but I look forward to chatting with you tomorrow. Also, anybody else want to chat tomorrow, send me your number. I'll give you a call. I enjoy talking to people. I'm retired. I actually enjoy because I like the topic. I really do. Okay, investment, it's simple, it's easy. There's no employees, no very low overhead. I got to pay my cell phone bill and my commissions on my trades. I pay electric. Well, kind of yes, kind of no on the electric bill part. Ginger. Anyway, do you use your full portfolio, take the 1%, sell and repeat? Alex, the past few months, I've cut back. It used to be 98% of all my money's invested. Well, at this point now, I'm down to like 90%. So I leave a small cushion just for margin calls. And I had 2 margin calls in the last 2 weeks. So now with the uncertainty, because, people are weird. Don't get me wrong. I know. The powers that be, and don't kid yourself thinking you know who they are. Nobody knows who they are. The powers that be are pitting us against each other. Okay? Man against woman. Democrats against Republicans, the Chinese against the Japanese against the blacks against the whites against Hispanics. They're pitting us against each other without letting us know what they're doing in the background. So lately, stock market's heading downward, but it always goes down when a president first comes into office. Okay, new president in office, see what happens. Okay, when it does, then if and when everything levels out, I'll go back to 98% of my funds being invested at all times. Teeny bopper. Holy wow, I haven't heard that word in a while. Now, teeny bopper, you're new here, relatively, really, really, really new, because I said at the beginning, please only ask the question once, and you did it 4 times. I'm not quite sure if you were paying attention, but you're new here. Bicky Dillon, how are you this evening? Walmart. Well, let's take a look at Wally World. WMT. La, 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 la. Okay, here we go. Wally World. Here we go. Is there a specific time you make your calls? Yeah, when I wake up. See, the nice thing about being retired, Angie, I sleep until I'm done. kind of weird because I wake up when the sun gets up. So, just one of those things. So let's take a look at Wally World. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down. What's going on here? 85.96. We can call that 86. 86 going for 105. That is more than 1.5%. Well, let's take a look. A year ago, we're at 61, and then we dropped to the bottom of the year, the end of July, at 58.60. Okay. Now look at the last 90 days. Okay. The high, the low, where was it? Where is it? Look, it's down, up, down, up. All right. Last 30 days. Okay. Here's your last 30 days. That's pretty easy to see. 30-day high, down, up, down. Here we go. Now she's going back up again. But she's been going sideways this week. Okay, no big moves to the upside, but here's the 30-day bottom. So the question you need to ask yourself, am I okay with buying this at 86? So if I buy it at 86, yeah, I can make $1.05 this week. And what am I going to make next week? Probably about the same. Because the thing is, with these options, you could trade them every single week. Once you own the stock, you can do whatever you want with it. All right, we're past 11, so we've got a half hour left to go. Let's keep on keeping on. I don't understand this. I will like to inbox you to get more understanding. All right, Zima Jones. I'm sorry you don't understand it. Inbox me your number. I'll give you a buzz. We can chat. That Silver Guy, Zima, it takes time. I was in your position like a month ago, but once you start to hear what he's saying over and over, it starts to click. Thanks, Silver Guy. I remember when you first jumped on. Jeff Jurassic. I believe she played the 21 March 2025 covered call. Okay, thoughts on QVC? Oh boy, QVC. I want to go straight to Yahoo Finance and find out what the history for QVC is. QVC, are they consistently profitable? If so, all right, wait a second. QVC is not a stock. QVC. C. All right. QVC is not a stock, kiddo. Sorry. Remedy. What's happening? What platform? All right, this platform here is called Think or Swim. It's through Charles Schwab. Now, you can download it onto your computer. I would suggest not do it on your phone because it's too congested on there. Do not use the online version. It's not as good as the downloaded version onto your computer. Good news car loans. Cool beans. All right, we looked at JMTN last night, didn't we? MTN. Okay, MTN is not 20 years old. We looked at this last night. Look at these numbers. 15, 19, 21, 42, 62, 81, 105, 147, 176, 88. Can you explain to me why they just cut the dividend 50% in 2019? 88, 191, 202, 206, 222. Yeah, no, sorry. They cut the dividend in half. But then they went back up again. I don't know. But it's not 20 years old. Why would I do a stock that's not 20 years old, not consistently profitable? Well, let's take a look at the numbers. MTN. Oh, it's a monthly. No. 21 March, 17 April, 16 May, 18 July, blah, blah, blah. No, no, no. Sorry, I don't do monthlies. The numbers just don't work. Sorry. Cool, cool. You got it. Tatted up Ginger. Hey, what's happening? JRG. We just looked at MTN. It's going to be a no for me. If you like it, more power to you. 86 is in the house. Really, dude? 11 o'clock you show up? I don't know. Thoughts on coals? Euryptus. I don't know. Coals. Now, I do have some coals. I'm into it at 22. Look where it is. Okay, I'm into it at 22. And it's down here at 8.50. But I have no intention of selling it. And yes, I do make over 1% every single week on coals. Let's take a look at the numbers and see what you think. Alrighty then. Coals a year ago was at $25.90. Look at that, $25.90 a year ago, and now it's at 8.5. Well, that's a 66% drop. Right, somewhere around there, 66. Okay, the high of the year, $29.66, and she just falls. Last 90 days. Here's your last 90 days. Here's the high, here's the low, here's what it was, here's what it is. Look at this. Down, big drop, sideways, 858. So we'll be looking at the 850s. Now, here's the thing with coals. The last 30 days. Okay, look at this. Sideways. Here's your high right here. Sideways. Big drop. Down. Here's the bottom. 1, 2, 3, 4. 4 days up. Higher highs, higher lows, higher highs, higher lows. Going up 854. The 850s are going for 3 cents to 23 cents. Okay, well that makes sense. Now, I don't know if you guys know this. All right, some of you may know it, some of you may not. Now, over here, okay, these numbers over here, it's called volume and open interest, meaning how many contracts today and how many contracts total. Well, look at this. 3,300, 1,200, 8,900, 1,100, 3, 7. So that's quite a bit. So that's 3, 5, 5 and 9 is 14, 15, 16, about 16,000 contracts. People going to the upside. Well, look at the downside. 200, 500, 800, 400, 400, 200, 200. Not even close. It's like a 3-to-1 or 4-to-1 spread. So more people think it's going up than going down. Okay, it's another indicator. You can use that information. That's good. All right, so what does Kohl's look like? The 850s. One contract at the market. And here's what it looks like. Please note that you're selecting a weekly option. Okay, the following order is expected to place blah, blah, blah. With market orders, blah, blah, blah. The underlying security option, blah, blah, blah. The daily borrow fee, blah, blah, blah. Okay, all that crap. Read it, don't read it, up to you. Buy one covered call, Kohl's 100, those are the weeklies, 28 March 25. That means it's expiring next Friday, the $8.50 call option against the Kohl's stock at the market to open. Profit is going to be $9. Well, that sucks. Hold on. $9, and how much is it costing me? $841. $841. That gives me a total of 1.07. Well, it's still over 1%. That's what I'm looking for. Now, let's get out of that. And let's go to there. All right. Oh, I want to change that one back to single. There we go. All righty. So, yeah, I do own some Kohl's at 22. I did sell the 950s this week. They're going to expire worthless. More than likely, I will probably sell the 950s again next week. Pick up another couple of percentage, a few more dollars here and there. Joanna, how are you today? Ava Howard, how are you doing? Fanny, thank you for that, Miss Fanny. Realm Sync, you're welcome. M. Brooke, the lovey boat. The love boat. Soon we'll be making another run. The love boat. Father of Dragons. Do you incorporate puts for downturns, or do you only stick to covered calls and upswings? Okay, Father of Dragons. Let me see if I can explain something to you in simple terms. Okay, now I'm not trying to insult your intelligence or anything like that. I'm here every night sharing a trading strategy that I created for my 9-year-old daughter. As a matter of fact, we haven't seen her lately, so let's pull her up and you'll get an idea of who I created this strategy for. Here we go. We're going to go over to YouTube because we have a lot of YouTube videos. Oh, my hair's a mess. Okay, videos. Here we go. And the oldest videos. And here's the princess right here.
As you being part of my internet website called Thingy, which my dad didn't let me call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
It's over 21 days in the month of March. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends.
I still laugh every time I see that. But here's the thing. Okay, to make it fun and exciting for a 9-year-old, well, we did a lot of fun and crazy stuff. Behind me, you'll see an EX Dividend calendar. Well, they didn't have EX Dividend calendars in those days, so I had to create one on a whiteboard behind me, and I had to fill it in every, once a week by hand. So behind me, you see which stocks are having dividends on which months. Okay? Now, I've been doing it for a while. Yeah, I had a lot more hair back then, less gray, but it is what it is. So that's the princess. Now, when she was 9 years old, she said, Daddy, can you teach me what you're doing? Out of the blue. Jumped on my lap, said, Daddy, what are you doing? Can you teach me? So for a 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. Because we all know if a 9-year-old little girl starts losing money, what's the first thing she's going to do? She's going to start crying. When she starts crying, Daddy's going to feel like shit. Okay? Mama's going to get involved, and guess who's sleeping on the couch? So, simple, safe, predictable, consistent, 1% per week is what we're looking for. 5 rules. Never buy something you don't understand. In her case, it was never buy something that's not on the list. Now, the list was the calendar. So when I say we want to buy the stocks 2 weeks before the EX date, well, there's certain stocks that are 2 weeks before the EX date on a Monday. Okay? And those are the only stocks she looked at. That was it. It's either yes or it's no. Okay? How to be simple, safe, predictable, consistent, no way to lose. 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. I like 2 decades of profitability. Weekly options only. No weekly options. No thank you. And then number 5, make sure the numbers work. What am I buying it for? What call strike am I selling? Am I making my 1%? Is it the right time? Because I want to look at this. I want to look at the chart. The chart's going to tell me what's happening. Okay? Now we, the buyers and sellers, we decide when it's too high. We decide when it's too low. Now if we buy here and she jumps up, most of us are going to take profits. Because here's the funny thing about profits. Number 1, it ain't a profit until you take it. Number 2, nobody ever went, well, as far as I know, nobody ever went broke taking profits. Take your profit, move on to the next one. There's 9,970 different companies available. Pick one. Pick a good one. Pick one that's profitable. Pick one that has options. Pick one that makes sense. If it doesn't make sense, don't buy it. If you don't want to hold it for the rest of your life, don't buy it. Simple. All right. Let's go. Let's go. Let's go. All right, let's get out of that. You guys don't want to see me. That's the old me. All right. Joe Syke, what's happening? Emran, how are you doing? Disgruntled Cook, D just paid $1.33 dividend today. Okay. Bull Gates, Old Dusty Taco. How are you doing today, Old Dusty Taco? User 961876994. Yeah, whatever. How you doing? Bear Gates, Old Dusty, no idea what that means. Whatever. Bill Gates, yep. Okay, hey, okay. Dusty, come on, stop that. Hello from Jennifer. 4.25% on which stocks? Jennifer, I read them all off. If you want to take a look at them, you got to go back and watch the video again. Because at this moment in time, it's 11:19 p.m. on the 20th of March, 2025. Live at this moment in time. If you watch it afterwards, yeah, it is being recorded, so you can watch it over again. David, you're welcome. Great job. Done 90 minutes, blah, blah, blah. Stanley Whitehurst, how you doing? Can you take a look at Freeport McMoran? Dude, you got to give me the ticker symbol. I've never heard of that company. Okay, Master of Coin, New York. How you doing? How does Mara qualify for your list if it's not a dividend stock? Because maybe it was on someone else's list that had me take a look at it. Now, you guys make suggestions, and I write them down. I take a look at them, and I tell you what the numbers are. That's basically all I do. The Remedy. Good evening, good evening. Growing for Wellness, LLC. Cool. Angie, I sent my phone number. Yep, we already did that one. I'll speak with you in the morning. Moderator 86. Thank you. Thank you, 86. Called a bunch of people this morning. Send me a number again. I'll try to call you again. All right. Wise Family Living. How you doing? Great. I'll send to you on TikTok. Yep. Ooh, Jersey wants to take a look at Intel. Now, I do have some Intel. So, INTC. Ooh, check it out. Here's the high. Here's the... Oh, look at that. There's the low. That's where it was. This is where it is. Look at it. Down, sideways, down, sideways. We're at 23.96. Okay, 23.90 is going to be closest to the 24. And the 24 is going for 73. Now, 71 to 73. Okay, that's just a little bit less than 3%. All right, so that works. Now, let's take a gander. A year ago, 42.34. The high of the year, 45.41. That was back in the end of March. Now look at the support or the lows. Okay, 1850, 1860. July, August, December, January, February, and came close again in March. This is what you call some pretty damn good support. 1, 2, 3, 4, 5. Almost 6 times it hit that number and wouldn't go below. Well, that's pretty good support. Look where it is now. Last 30 days. All right, here's your last 30 days. Now, I have Intel at around the $20 area down here. Okay, I'm letting mine go this week because she went up. Now she's pulling back. I'm taking the profits and say thank you, and I'll see you again next time. Yeah, so this one's coming to the downside, so I'm not going to be jumping into that one. We got 8 more minutes. Let's go through the rest of the questions. No more stocks, questions only. All right, Angie, we'll take a look at that in the morning. Live boxing, back again, dude. How are you today, or this evening, shall I say? Let's keep on keeping on. Zima Jones, you're welcome. Rizzo, what's happening? Uh-oh. Hold on, just moved. Okay. Thank you. Demo Man, does Thinkorswim charge a monthly fee or is it free with a CS account? Okay, I'm not quite sure what CS account means, but you can download onto your computer. You can use it for free as far as I know for 1 to 2 months, but they would like you to open up an account with them and trade with them. Now, I wrote a book 15 years ago on choosing a right trading platform, and I've chosen and used about 8 to 10 trading platforms in my life. This one I found 20 years ago, and I haven't found another one that surpasses it yet. Okay, they say if it ain't broke, don't fix it. They haven't done anything to this whatsoever. They've left it alone. It's the same as it was 20 years ago, so I got no problem using it. Why is your dog crying? I have no idea, Jersey. Cesar Trill, how you doing? Alexa, Alex NBA 76, how you doing? Angie, I'm sure
how to help you with that.
Oh, that's funny, because I said that name and then she answered me. Alexa, smooth jazz.
Here's a station you might like. Smooth Jazz on Amazon Music.
Alexa, louder. There we go. Some mood music. Cool beans. I'm sure she's really appreciates you. Thank you. Mara is on Warren Buffett's list. Not 100% sure. I don't remember where it came from, but somebody suggested it a while ago, and it's just profitable every single week. Oh, we're at the end of the questions. M. Brook, how are you today? Freeport McMoran is a New Orleans company that I believe is a lot. Okay, Alexa off. Sorry. Hold on a second. I believe is in a lot of stuff. Diamonds in Africa. Okay, now I've never M. Brook. Don't get me wrong. It may be a great company, but I've never heard of it. Okay, now I've been doing this for 20 years. I'm pretty good when it comes to companies that are consistently profitable and have weekly options. So if you're in the red in the stock, are you setting strike prices on the higher side? Yeah, about 3 strikes out. Now it's always a numbers game. Silver guy, always a numbers game. Where did I buy it? What option did I sell against it? Where is the flow going at the moment? Is it trending down? Is it trending up? Is it going sideways? Am I at risk of losing? Now, I look at all my stocks twice a day. Once in the morning with my paid trading group, because the guys, you can watch over my shoulder as I trade. You can ask me any questions you want. And I stay online until you guys are done asking questions. I'll stay on for 2 or 3 hours if you guys keep asking questions. And I'll actually look at your account and walk you through it and teach you. Never had anybody offer that to me. What I'm offering to people, nobody's ever offered that before. It's, to me, anyway. Anyway, let's keep on going. So if you're in the red, yep, we already did that one. What happens when it passes a strike price? Oh, it sells all your contracts at the price. No, not at all. Hold on, Silver Guy. Let me show you something. Let me show you something you might appreciate this. Not quite sure. Let's go right there. Let's go right here. U.S. Steel. Okay, see? U.S. Steel. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Kind of makes no sense, does it? It's kind of like just going sideways with a couple of drops and a couple of spikes, but just basically sideways. All right, so let's zoom into the last 30 days. Okay, here's the last 30 days. Okay, down, up, down, up. Now she's coming back down again. But look at this right here. Now, you haven't seen this before, but right down here is my position. Okay, I got 3,200 shares. Okay, at 41.25, which is right about here. However, I sold the 32 contracts. Now, why did I sell the 32s? Well, it's up here. Now, I've had this since sometime in... Hold on a second. Okay. I've had it since December 2nd. Okay. And I got it at 41.25. Now, I sold the 32 call. Why did I sell the 32 call? It doesn't make sense, does it? Well, right here, back in January. You see where it is? $30. When it was at $30 per share, I sold it 3 strikes out of the money. 30, 31, 30, 30, 50, 31, 31, 50, 32. So that's 4 strikes out of the money, the 32. I had no idea she was going to do this. See? She jumped up, she gapped up, went up, gapped up again, and then she settled in this range right here. But I already sold the 32s. So the only thing I can do is roll it forward. Well, what does that mean? That means I buy back that option and I sold it to someone else. Now, I couldn't increase my strike price because that was going to cost me money. And I don't want to spend money because that comes up as a negative. So yeah, every once in a while, yeah, I'm in it at 41.25, which is way up here. But in January, I sold the 32s. And I couldn't get out of them, so I kept rolling them forward, rolling them forward, and rolling them forward. So what does a roll forward look like? Well, you right-click, create a rolling order. There it is right there. Now, it's telling me I have to pay, and I have no desire to pay whatsoever. Okay? Buying back 4 April, selling the 11 April, and it's going to cost me $35. No, I ain't going to do that. But look what happened. See, I sold the 32s, and whoever bought it from me paid $8.29. So you take that $8.29 and you add it to the 32. So whoever bought it is now going to have to pay $8.29 plus that $40.29. Who the hell is going to pay $40.29 when they can buy it at $40.22 or whatever the number is? So I keep rolling it forward so I don't lose any money. So I keep collecting a premium every week. It's not doing it this time, but you know, if I move it forward, let's go to 25 April. All right, see? If I move it to 25 April, I collect another 45 cents, which is another 1%. Okay, do you see that? So if I buy back this one and I sell that one, what it does is it pushes it out another week or two, and it gives me another 1%. It saves me from losing. It gives me the opportunity for this thing to drop. Where is it now? Okay. Right now, it's at 41. It gives me an opportunity for this thing to drop back down and allow me to buy it back to 32 and sell it. It's a numbers game. How about we just leave it at that? It's a numbers game. I don't want to lose, so I keep pushing it forward, keep collecting 1 or 2% every single week. I'll even take a 0.5%. I don't care. I don't want to lose. So I have 0 losses so far this year, and I'm going to keep pushing it forward, keep collecting 1% every week or every couple of weeks. Okay? Hope that answered that question. Augie Dog, can I come up? I have no idea what that means. Arnold Silver, how are you doing this evening? Okay, Augie Dog, I'm not quite sure. Can I come up? What does that mean? Just confused, and my stock is in the red. I don't want to seep, but how do I go about not getting rid? Okay, see, Silver guy, this is why people pay to join the morning group. So I can actually see what it is you're doing, go through the charts with you, give you my explanation, and ask you, does that make sense? If it makes sense, great. If it doesn't make sense, well, we'll dive in a little deeper until it does make sense. That's why people pay to actually trade with me. And it's not like you're paying me, you're paying yourself, because here's the way I look at it. I could care less about the money. Seriously, could. You are paying to make a commitment to yourself. So, hey, I'm paying this until I learn it. Once you learn it, fine. Stop, don't be in the group anymore. It's that simple. But stay every single week. So those who pay attention. If you're paying to be there, you're going to pay attention. Okay? And when you learn as much as you can learn, it's like, hey, James, thank you very much. It's awesome. I learned everything I can from you. I don't need it anymore. Wonderful. Great. Have at it. Okay? So I can't really see what it is you're doing by the couple of paragraphs that you're throwing out at me. Okay? See, my goal is to make sure everybody in my trading group is consistently profitable. And you can ask me any questions you want. When you're done asking questions, I call it a day. But I will stay on and answer every question until you have everything answered. All right, let's keep on going. Live boxing. What stocks do you think the tariffs are going to affect, negative and positive? Don't know, don't care. See, live boxing, I buy U.S. stocks. Okay? You don't want to be affected by the, what do you call those, tariffs? Stop buying shit made in different countries. Buy American stuff. Simple. You don't want a tariff? Buy American stuff. Plain and simple. Augie Dog, you have questions? Ask away, Augie Dog, I'm here. Flipper McGee, I've asked 3 questions and have skipped over each time. Flipper McGee, no, you haven't. I answer each and every individual questions. I stop the roll one at a time and I answer each individual question. This is the very first time I've seen your name. And I'm really good with names. Really. Okay? Now, Augie Dog has been here not that long. Lindarella, she's been here for a couple of months. Okay? Matt Tash, he's new. Can we talk about nice? Tomorrow we can. Oh, wait a minute. Sunday. Because tomorrow's Friday night. I don't do Friday nights anymore, and I don't do Saturday nights anymore. Now, last year, every single night, 365 days. No, I missed 6 days last year. Okay? I was sick, had to take someone to the emergency room, and then 4 days I missed because of the hurricane. No water, no electric, no cable, no internet, no phone. For 4 days. Didn't bother me a bit. I lost about $2,500 because I couldn't make any trades, but it is what it is. Lindarella, you have a good night too. Can we talk about nice tomorrow? Next time we can. But with U.S. Steel, you could trade the same dynamic with long leaps and weekly calls. Augie Dog, you're 100% correct. That's called a calendar spread. Not what I teach here. It's more capital efficient. Yes and no. Because what you're remembering with a calendar spread, the leap that you bought decreases every single week. Okay, so you can write a covered call every week, but the leap that you sold decreases also. Why didn't you roll it up and put? No, I don't do puts. Sorry. Up and out. Yeah, I get what you're saying, Matash. I do. Okay, if I roll it up and go for a higher strike price, I'm going to have to pay. No desire to do that whatsoever. That means if I have to pay money, that means I'm losing. Yeah, that doesn't work for me. I have 0 losses this year, and I plan on keeping it this year. Augie Dog, do you benchmark your trades to anything, or do you just tell yourself you have alpha? I'm not quite sure what you mean by alpha, but okay. Do you run the wheel often? No. This is very interesting. Thank you very much. Live Boxing, thank you for that. The Silver Guy just joined. Cool beans. Garrett, how do you decide on dividend stocks for each week based on indicators? Okay, Garrett, thank you for showing up. Garrett, you're relatively new here. Let me tell you what my indicators are. You ready? You might want to write them down because they're a little complicated. You ready, Garrett? I'll give you a second to grab a pen and paper. I'll take a sip of my tea while I'm waiting. All right. You ready, Garrett? Here we go. I have 2 indicators. Only 2. Ready? Are you sure? Indicator number 1. Consistency of profitability. Are they consistently profitable? I'm looking for 2 decades. Now, if you don't know what 2 decades are, it's 10 years per decade. So that's 20 years. 2 decades, 1 decade, 10 years, 2 decades, 20 years. 20 years consistent profitability. Okay, the stock market's been around for 400 years. I don't think 2 decades is that big a deal. Okay? Number 2, weekly options. That's it. Weekly options, consistency of profitability. Then I take them, I stick them into a calendar. The little green dots, those are each and every company that has a dividend. It's called an EX dividend calendar. Okay, now it may look like there's only 1 here, 1 here, 1 here. Nope. There's just too many to fill the box. 37 here, 81 here, 32 here, 113 here, 32 here, 59, 36, 139, 66, 76. That's a whole shitload of companies just for the month of March paying out a dividend. How do I find which ones I like? Well, which ones are those that are consistently profitable? Not that difficult to figure out. There you go. Each one of these companies has 25 years of increased profitability. Okay, 25 years, increased profitability, each one of those. Then I look for weekly options because I want weekly cash flow. That's simple. Yvonne Draws, how are you this evening? Chris, thanks for your wisdom. I learn a little every time I watch. Your thoughts on Zim. Thanks. All right, dude, Zim doesn't work for me. It hasn't been in business long enough, and it hasn't been consistently profitable. Zim, for me, is a no. Yvonne, hello again. Hugh Mungus, yep, I did it again. MPC, never heard of it. Aya Ali Away, okay. I just buy stocks in healthy companies that I understand when they're at a good price. Well, that makes sense. Options are too risky. Okay. AJ Alleyway. Okay, AJ Alleyway, you think options are too risky. Okay, I'm not going to try to convince you otherwise. But let me see if I can explain it in this manner. Okay? You ready? Now, AJ, let's say, okay, hold on. Let's say, hypothetically speaking, you have a 1972 MGB convertible sitting in your backyard. You take that little car, you push it out to the front, and you say, I want to sell this thing for $5,000. Great. Slap a for sale sign on it. Now, Tom, the guy who lives 2 streets over in that white house with the blue shutters and the the busted window in the front, yeah, that guy. He stops by and says, hey, AJ, I like your car. $5,000, not a problem. Let me give you $1,000. Hold it for me. Not $1,000. Wait a minute, $5,000. $50 will be 1% of $5,000. Let me give you $50. Hold it for me until Friday. If I show up on Friday, I will give you the $5,000 for your car. You say, okay. However, if I don't come back on Friday, keep the $50, sell the car to someone else next week. That is what a call option is. Giving somebody the right to buy something from you at a certain price by a certain date. So let's replace the car with a stock, IBM. Let's say you own IBM at $100, and Tom wants to buy it from you at $100. He's going to give you $1. That's 1%. I will buy it from you on Friday at $100, which you already own it at $100, and I'm going to give you $1. Now, if it's at $99.99, he's not going to buy it. You get to keep that money. That's 1%. Now you take your IBM and you sell it to somebody else next Monday, and they give you 1%. And let's say it goes to 98.95. Below 100, they're not going to buy it. So you take that IBM and you take it and you sell it to someone else for 100, and you still get 1%. So you get 1%, 1%, 1%, 52 times a year. That's over 50% a year, dude. I don't know why you call that risky. I'm selling options. I'm not buying them. 80% of all options expire worthless. I don't buy options. I sell them. If I own IBM at $100, I have no problem whatsoever selling it to Tom at $100. He's going to pay me 1% or more just to be in line to buy it from me at 100. I'm just getting the 1% every single week. 1% every single week is over 52% a year. And I don't know why you think that's risky. But you know what? You buy your stocks, you do what you do. If it works for you, great. Okay, I come from an age, we call it, I think we're called Generation X. Yeah, if it ain't broke, don't fix it. If it works, leave it alone. This works for me. I buy IBM at $100. I sell it to someone else at $100. I get 1%. I get all my money back, and then I do it again. That you own shares of. Yeah. Didn't you get that analogy? If I bought a car and I own the car at $5,000 and I want to sell it, I get 1%. If he shows up, I get the money. Okay? Same thing with stocks. If I buy a stock at $100, I own it at $100. I can turn around and sell it to someone else for $100. But I do it through an option. And that option, they pay me what is called an option premium. They pay me 1% on a Monday or a Tuesday, and they buy it from me by Friday. If they don't buy it by Friday, I still keep the stock and I keep the money. And then next Monday, I do the same thing over and over again. But wait, I don't want to offload my shares. Well, then you're definitely in the wrong place, dude. We're here for cash flow. I'm not here for capital appreciation. You're buying the stocks for a reason. You're buying them to make a profit. You're buying them to take whatever money you have and make that money bigger. So whether you buy the stock and hold it for 10, 20, 30 years, great, no problem. That's not what I'm here for. Okay, you're definitely in the wrong place. I'm here for cash flow. Okay, cash flow. That means every single week I make 1%. So let's look at it this way. If I have $100,000, 1% a week is $1,000 a week. That's $50,000 a year. Okay? You want to buy and hold? Ain't no problem with that whatsoever. I think that's awesome. Great. Good for you. Nothing wrong with that at all. But you're in the wrong place. Master Jack, excuse me, sir. I missed the part where you've mentioned the platform you use. This is Thinkorswim behind me. And it is owned by Charles Schwab. Okay? Do you always sell at the money where your cost basis is? Matesh, it depends on the numbers. Okay, what am I buying it for? What am I selling it for? Does that make sense? Now, if it's at the money, whatever I bought, if I bought it for $100 and I sell it at $100, I have no problem with that. If I buy it for $98.88, I'll sell the 100s. Okay? It's always, always, always about the numbers. What am I buying it for? What am I selling it for? Hey, James, I finally sold my 13 covered calls today on APLD. Been trying since Monday. Okay. But honestly, I have been greedy. Okay, that is an obstacle you're going to need to get over. Now, it's 11:45. I am done with all the questions. You guys have a great night, and we will see you again next time. Have a great evening, everyone. William over McKinney, how are you doing today? Catch you later, brother. And over here on Instagram, you guys have a great night. And now, the end is near, and so I face the final curtain. I've lived a life that's full. I traveled each and every highway.